Hi all and welcome to our weekly report. We have a short week ahead of us due to the market closing for Good Friday. The economic data is very light on Monday. RBA meeting minutes, UK employment and average earnings, in addition to European ZEW Economic Statement, are the main point of interest on Tuesday. China GDP, UK, European and Canada Consumer Price Index are all due on Wednesday. The week will finish on Thursday with Australia employment, Eurozone Manufacturing PMIs, UK and also US retail sales data. Now, let's take a look at few markets. This is the intraday price for euro dollar based in 4-hourly time frame. The price action appears to be bearish, currently capped by this falling resistance trend line, which is pointing to 1.14 level. Also, in addition to that, same as last week, if we take the fib from swing high to swing low, we have this lovely resistance zone based on fibs of 50% and 61.8, just below that 1.14 area. Now, the price action is currentely supported by this rising trend line in what appears to be a breakout above this inverted head and shoulder pattern with a neckline at 112.50. Price action appears to be bullish from the intraday point of view because the price is currently creating the sequence of higher highs and higher lows above rising 20 and also 50 period moving averages. So as long as that 1.1250 support holds, bulls are in control, potentially targeting resistances to the upside. So either a pullback from this current fib retracement into the support of 112.70, 112.50, which is that rising support trend line. I'm being fairly vague here because it is specific to the trend line and the moving averages, which could change over time. But pullback to that zone would likely incentivize bulls to come and engage, potentially looking for a further upside move towards 1.1350, 60, possibly even 1.14 to the upside. Alternatively, a pullback and a loss of that rising trend line, and in particular loss of 1.1250, would negate the bullish outlook and then open up the way for a deeper retracement lower towards 112.20. Confirmed loss of that level and end of day close below that level would open up the way for the retest of 111.80, 111.50, possibly even 111 to the downside. This is the price action for cable in 4-hourly time frame. The energy is building, the price action is coiling. You can see we have a sequence of slightly lower highs and slightly higher lows. The price action is currently capped by 1.31 level. Confirmed dip lower and end of day close would open up the way for dip towards 1.30, possibly even 1.2950, and then a retest from underneath of that 1.1370, 1.31 level would open up the way for a deeper retracement, possibly some news surrounding Brexit or maybe a negative reaction to that, or maybe even a US dollar strength would open up the way for the retest of deeper retracement towards 128.60, possibly even 127, 126.55. Alternatively, if this current rising support trend line holds and we see either a pullback and a breakout or a gradual breakout from the current levels above 131, would initially target 131.60, possibly 132. Only the end of day breakout above 132 and a retest of that level from above as a newly found support would open up the way for the retest of 132.80, 134, 134.90, 135 to the upside, which would be basically a positive reaction for sterling or sterling currency crosses in particular. Now, this is dollar Japanese yen. We have a very nice breakout above that 111 level and a retest from above. Current support is at 111.45. The price is capped by 112. Nice and round number and very close to these highs here. If we see a pullbacks into 111.45, 111 again, and then a rally from that level, or a shallower pullback and a break breakout higher. Keep an eye on resistances at 112.45, 112.50, possibly even 113.50 to the upside. Alternatively, only a dip lower, US dollar weakness of some sort, or maybe Japanese yen strength, and the end of day close below 111 would negate the bullish outlook from the intraday perspective and then open up the way for a deeper retracement towards 110.44, possibly even 110, 109.40. The next thing that we are going to take a look at is Aussie dollar. Aussie dollar in 4-hourly time frame appears to be creating that inverted head and shoulder pattern, and the price action is currently creeping up very slowly towards that neckline and the psychologically important level at spot 72. Only a breakout above spot 72 and end of day close would confirm the breakout of this inverted head and shoulder pattern, and then that would open up the way for a retracement higher towards 72.50, 73, 74, 75 to the upside, and the measured move would be the distance of the head to the neckline on the breakout level, or at least from the shoulder to the neckline extended to the breakout level. Alternatively, either a spike into spot 72 and a retracement, or a gradual retracement from a current highs and a daily loss and end of day close below this initial downside support towards spot 71 would negate the existence of this inverted head and shoulder pattern, and then it would become something else, possibly even a bearish rising wedge, opening up the way for a deeper retracement towards spot 70, 50, spot 70, 20, spot 70 to the downside. Dollar CAD appears to be coiling as well, quite a bullish price action. We have a reaction, consolidation, breakout. Now this is another consolidation with 1, 2, and possibly a third touch to the upside to this falling resistance trend line. Significant support here, here, and here as well. So looking from the levels point of view, dollar CAD is currently capped by this 1 spot 34, 1 spot 34.20 level. Confirmed breakout higher and end of day close above that level would appear quite bullish, targeting 134.60, 135, possibly even 135.70. If we take the extension of this flag pole and extend it to the upside, that would bring us to that swing high of 136.50, 136.40. Alternatively, either a rally into here and a rejection, or a loss of these current lows and the end of day close below 133, 132.50, and then retest of that level from underneath as a newly found resistance would then open up the way for a deeper retracement, and it would negate the bullish outlook towards 132, 130, 140, possibly even 131 to the downside. Gold appears to be bearish at the moment, capped by this falling resistance trend line and 1306, 1310 resistance level. The price action was bearish over the past couple of days, and if this current support doesn't hold, and it held in the past at 1290, then bears would be in charge. So either a loss of these current lows and a dip lower, or maybe a shallower pullback towards 1300 and then retracement favors bears, potentially targeting 1282, 1280, 1274, 1270, 1265 to the downside. Alternatively, if these oversold conditions play out and we see a spike higher, only the end of day close above 1306, 1310 level, and the green bullish candle forming above this current falling resistance trend line in 4-hourly would negate the bearish outlook, opening up the way for the spike higher towards 1322, possibly even 1330, 1346 to the upside, which would be referencing this swing high here. Lastly, let's take a look at crude. Crude is uptrending quite nicely. We had a massive oversupply in inventories over the past couple of weeks, but the crude oil is continuously moving higher with the sequence of higher highs and higher lows. Current price, intraday price action, is trading above rising 20-50 moving averages, and also it's supported by this rising support trend line. The current price action potentially is looking like a triple top from the intraday point of view, capped by 64.50. If we see a corrective pullbacks from the current levels towards 63, 62.45, it would quite likely be seen as a bullish retracement and the retest of this rising support trend line, and then the bullish traders would be likely looking for a bounce of that level and a spike higher yet again towards 64, 64.50, 65.50, possibly even over a longer term time frame 68. Some traders are looking for 68. Alternatively, a pullback and the end of day close below 62.45, especially below 61.40, would negate this current bullishness and change the outlook, opening up the way for a deeper retracement towards 60, 65.40, possibly even 66.30, 66 to the downside. Thank you for watching. Thank you for listening. We've covered a lot. Stay safe and happy trading. Bye for now.